The Nightly Business Report.
Good evening. Tonight, Sri Lanka sees strong surge in August tourist arrivals, crossing 1.4 million mark for 2025. Sri Lanka's July remittances surged by 23% year-on-year, reaching $697.3 million, highest monthly inflow in 2025. Sri Lankan stock market posts modest gains as investor sentiment remains cautious amid mixed economic signals. And Musk raises profit outlook as strong container demand defies global trade concerns.
From Studio 24C, here's Prashansa Gunawardena.
Good evening and welcome to the Nightly Business Report. Sri Lanka's tourism sector has kicked off August with a 20% rise in the arrivals during the first 5 days, pushing cumulative arrivals for 2025 past 1.4 million. Major cultural events and free visa scheme are driving the strong performance as the country aims to surpass previous records.
Sri Lanka's tourism sector started August strongly, with tourist arrivals increasing by 20% during the first 5 days compared to last year. The country welcomed 40,047 visitors from August 1st to 5th, pushing arrivals for 2025 to over 1.4 million. India remained the top source market, followed by the United Kingdom, China, France and Italy. The surge is attributed to cultural events like the Kandias La Perera and the introduction of a free visa scheme. Despite the positive momentum, Sri Lanka still needs around 1.6 million more arrivals in the remaining months to reach its 3 million annual target. Achieving this will require sustained growth well above current monthly averages.
The Colombo Stock Exchange, in partnership with Securities and Exchange Commission and the stockbroking industry, will host the Invest Sri Lanka Investor Forum in Singapore tomorrow. The forum aims to engage global investors and promote Sri Lanka's capital market as an attractive investment destination featuring high-level government officials, regulators and listed companies. 11 major listed companies will participate, showcasing the strength and opportunities within Sri Lanka's equity market. The event will include expert panel discussions on the economic outlook and equity market performance, highlighting recent reforms and macroeconomic stability. With the improved sovereign credit ratings and ongoing reforms, Sri Lanka is positioned to attract sustained foreign investment and institutional interest. Workers' remittances surged to a record $697.3 million in July 2025, marking the highest monthly inflow this year with a year-on-year 23% increase. The cumulative remittances for the first 7 months reached $4.43 billion, the highest since 2020, reflecting strong growth in foreign earnings.
Workers' remittances to Sri Lanka reached a record high of $697.3 million in July 2025, marking a 23% year-on-year increase and the highest monthly inflow so far this year. This figure also represents a 9.1% compared to June 2025 and is the second highest monthly inflow in history. For the first 7 months of 2025, remittances total $4.43 billion, a 9.5% increase compared to the same period last year. This amount is the highest since 2020 and a 6% increase over the first 7 months of 2016, the year with the highest annual remittance inflow on record. The remittance growth follows a strong rebound starting in 2023, with inflows rising sharply after hitting a 12-year low in 2022. This upward trend reflects increased foreign employment and a recovery in the economy following the recent crisis.
Private sector borrowings in Sri Lanka surged 221.5 billion rupees in June 2025, the highest monthly amount this year, pushing outstanding credit beyond 8.85 trillion rupees. This represented a 17.9% increase compared to June 2024, according to the Central Bank of Sri Lanka data. The June borrowing surpassed the previous peak of 158 billion rupees recorded in March, with lower credit demand noted in April due to Sinhala Tamil New Year holidays. Economic growth of 4.8% in the first quarter of 2025 and easing monetary conditions supported robust private sector credit expansion. Meanwhile, government borrowing from banks was 98 billion rupees in June, with public corporation credit declined 11% year-on-year to 584.1 billion rupees. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lanka's stock market ended the week on a positive note, with the ASPI posting moderate gains. The S&P SL20 remained relatively flat, reflecting cautious investor sentiment. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Prashansa. Reflecting the mixed sentiment from the previous week, the Colombo stock market witnessed a volatile trading session, with all share price index experiencing noticeable fluctuations. The market opened with a steady upward momentum, but trading was marked by a blend of buying and selling pressure. Despite the volatility, the all share price index managed to close in positive territory at 19,923 points, recording a gain of 96 points as well. CT Holdings, Cargill's, Selinco Holdings, Carson Cumberbatch and Dialog contributed positively to the upward movement of the index as well. Interest towards the banking sector counters also observed. However, subdued participation from both retail and high net worth investors was noted. Today's turnover amounted to 3.1 billion rupees, marking a 54% decrease from the monthly average of around 6.8 billion rupees as well. The banking sector dominated today's turnover, contributing 25%, followed by the capital goods and diversified financial sectors with a combined contribution of nearly 28% as well. When it comes to top three price gainers of the day were Halis Fiber, Cargill's and CT Holdings, whereas the top three price losers of the day were SME Finance and Dialog Finance, followed by Paragon Ceylon.
The Sri Lankan stock market showed mixed performance last week, with moderate fluctuations across major indices. Despite some volatility, investor interest remained steady, supported by positive economic indicators and corporate earnings reports. For further insights, we speak with Shahana Kanagaratnam from First Capital Holdings.
Thank you, Prashansa. The Colombo Stock Exchange commenced the week on a strong footing, with the ASPI climbing 96 points to close at 19,923, backed by a turnover of Rs 3.1 billion. While the overall market sentiment is expected to stay positive this week, some profit-taking is anticipated as the ASPI crosses the 20,000 mark. Both retail and high net worth investors are likely to remain active, with a greater share of participation coming from retail investors. Turnover is projected to remain moderate within the Rs 3 to 4 billion range. As this marks the final week for listed companies to release their earnings for the June 2025 quarter, market movements are also expected to be influenced by these announcements. In terms of sectoral performance, trading is likely to be focused on banking, capital goods, and diversified financials. Thank you.
Gold prices declined in Asian trade today as investors awaited crucial US inflation readings and sought clarity from Washington over tariff rulings on bullion bars. Spot gold fell 0.7% to $3,376.24 an ounce, while gold futures for December dropped 1.5% to $3,438.22 an ounce. In other precious metals, platinum futures fell 0.6% to $1,331.95 an ounce, while silver futures dropped 0.7% to $38.275 an ounce. Benchmark copper futures on the London Metal Exchange rose 0.3% to $9,789.25 a ton, while US copper futures were unchanged at $4.45 a pound. Meanwhile, the US-China tariff truce, which has prevented further escalation of duties, is set to expire on August 12th. While investors are optimistic about an extension, the outcome remains uncertain. Oil prices fell in Asian trade today, extending steep declines from the prior week as traders look to upcoming talks between the US and Russia, heralding a cool down in the Ukraine conflict. Brent oil futures for October fell 0.8% to $66.08 a barrel, while West Texas Intermediate crude futures fell 0.8% to $62.47 a barrel. Soft inflation data from top oil importer China also weighed amid middling signs of economic improvement in July. The print, coupled with a host of weak economic readings in recent weeks, kept oil markets largely negative on future demand. Trump imposed as much as 50% tariffs against India to stop it from buying Russian oil, and also threatened a similar move against China. The Sri Lankan rupee has appreciated slightly against the US dollar today compared to last Thursday. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has reduced from 297 rupees and 05 cents to 296 rupees and 81 cents, while the selling rate has also dropped from 304 rupees and 71 cents to 304 rupees and 64 cents. However, the Sri Lankan rupee has depreciated further against a basket of foreign currencies, including Gulf currencies. A short break now. This is the Nightly Business Report. Welcome back. David Perry's motor company's manufacturing complex in Ranna has become Sri Lanka's first facility certified as net zero energy by Control Union. This milestone highlights the company's commitment to sustainability through advanced solar energy systems and energy efficiency.
David Perry's Motor Company's manufacturing complex in Ranna Hambantota has been certified as Sri Lanka's first net zero energy facility by Control Union. This achievement reflects the company's dedication to environmental responsibility and energy efficiency. The transition was made possible through the installation of an advanced solar energy system by David Perry's Renewable Energy. The facility now produces more renewable energy than it consumes from non-renewable sources, achieving energy neutrality. Executive Director Bandara Herat emphasized the company's leadership in sustainable industrial practices and integrated renewable energy solutions.
The Department of Public Finance of Sri Lanka and SLT Services Limited have partnered to strengthen the country's e-government procurement system by integrating Promise.lk with RainbowPages.lk. RainbowPages.lk will provide verified vendor data to Promise.lk, ensuring all legitimate suppliers can bid for government tenders. The Department of Public Finance will oversee data exchange, maintain security standards, and encourage vendor participation. SLT Services will handle supply verification and continuous data validation to ensure a reliable and updated vendor database. This partnership marks a major step in Sri Lanka's digital transformation, fostering transparency, trust, and fair competition in public sector procurement. DFCC Bank posted a strong June quarter performance driven by rapid loan growth amid a lower interest rate environment. Net profits surged to 2.79 billion rupees, supported by robust lending, improved deposit mobilization, and rising non-interest income.
DFCC Bank reported strong financial results for the June 2025 quarter, driven by accelerated loan growth as lower interest rates spurred increased borrowing. Net interest income rose 16% year-on-year to 7.78 billion rupees, while the loan book expanded by 16.5% to 513.78 billion rupees in the first half of the year. Deposits grew by 13.9% and the CASA ratio improved to 26.54%, through the net interest margin dipped slightly slightly to 4.10%. Non-interest income also surged with fee and commission income up to 62% to 1.81 billion rupees and traded income nearly tripling to 953.71 million rupees. The bank increased provisions for bad loans to 2.21 billion rupees, but asset quality improved with the stage 3 loan ratio falling to 4.62% from 5.65%. Overall net profit rose to 2.79 billion rupees, a sharp increase from 1.85 billion rupees in the second quarter of 2024.
Sanasa General Insurance Company has successfully migrated its core insurance application and related services to Oracle Cloud infrastructure, marking a key step in digital transformation. The migration was executed in partnership with DMS Software Technologies, a leading Oracle partner in Sri Lanka. This move aligns with SGIC's commitment to leveraging advanced technology to enhance competitiveness and agility in the insurance market. SGIC's CEO highlighted that the migration ensures scalability, performance, and security, laying the groundwork for future digital innovations. This achievement also reflects Sri Lanka's growing adoption of cloud technology with the financial services sector. India's iconic ethnic lifestyle brand Fab India has launched its first Sri Lankan store at Havelock City Mall, Colombo. The flagship outlet marks a new chapter in cross-cultural retail, offering sustainable fashion and artisanal products tailored to local tastes.
Fab India, India's renowned ethnic lifestyle brand, officially opened its first store in Sri Lanka at Havelock City Mall, Colombo. The launch event was attended by dignitaries including the Indian High Commissioner and prominent members of Colombo society. The new store features a blend of traditional Indian ethnic wear and contemporary Western clothing, along with home decor, accessories, and wellness products. Fab India aims to celebrate craftsmanship and shared cultural heritage while catering to local preferences in Sri Lanka. With over 340 stores in India and international outlets in 7 countries, this expansion reflects the brand's commitment to sustainable values and timeless appeal.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stock markets were subdued on Monday as investors cautiously awaited updates on the US-China tariff truce set to expire this week, while Australian shares rose to a record high ahead of the RBA's expected rate cut. China Shanghai Composite Index edged 0.1% higher, while the Shanghai Shenzhen CSI 300 gained 0.2%. Hong Kong's Hang Seng Index edged 0.1% lower today. Both South Korea's Kospi Index and Singapore's Straits Time Index were largely flat. Futures tied to India's Nifty 50 edged 0.1% higher. Australia's S&P ASX 200 Index rose as much as 0.5% to hit a fresh record high today as investors bet the Reserve Bank of Australia will cut interest rates at its policy meeting this week. Intel CEO Lip-Bu Tan is set to visit the White House after President Trump has called for his removal last week. Tan is expected to have an extensive conversation with Trump.
Intel CEO Lip-Bu Tan is set to visit the White House on Monday, after U.S. President Donald Trump called for his removal last week. That's according to a Wall Street Journal report on Sunday, citing people familiar with the matter. The report said that Tan is expected to have an extensive conversation with Trump while looking to explain his personal and professional background. It added that Tan hopes to win Trump's approval by showing his commitment to the U.S., as well as guaranteeing the importance of keeping Intel's manufacturing capabilities as a national security issue. News of Tan's trip to the White House comes days after Trump demanded his immediate resignation. Trump called Tan highly conflicted due to his ties to Chinese firms, raising doubts about plans to turn around the struggling American chip icon. Reuters reported exclusively in April that Tan invested at least $200 million in hundreds of Chinese advanced manufacturing and chip firms, some of which were linked to the Chinese military. Reuters could not immediately confirm the Wall Street Journal report. Intel and the White House did not immediately respond, to request for comment.
Maersk raised its full-year profit forecast as demand for ocean container freight has defied fears of a hit from trade disputes, although the shipper warned demand was likely to ease in the second half of the year.
Shipping giant Maersk raised its full-year profit forecast on Thursday. It said demand for ocean container freight had defied fears of a hit from trade disputes. Maersk is seen as a key measure of world trade. It now expects global container volumes to rise by 2 to 4% this year. That compares with a range of down 1% to up to 4% it estimated in May. The Danish company also said it now sees underlying earnings before tax and other costs this year of between $8 billion and $9.5 billion. That's up from a previous guidance of between $6 billion and $9 billion. However, the shipper warned demand was still likely to ease in the second half of the year. The update came along with news Maersk had beaten second quarter projections. Earnings rose 7% year on year in the second quarter to $2.3 billion, well ahead of analyst forecasts. Maersk said a contraction in US imports was more than offset by strong growth in imports into other regions, including Europe. Trade between China and the US plummeted earlier this year as they raised tariffs on each other. It led container shipping companies to suspend regular routes or cancel individual voyages. Maersk shares were up over 3% in early trade before slightly pulling back.
That wraps up today's nightly business report. We value your opinion. Share your thoughts and feedback with us through email at feedback.ad24english@then.lk or via WhatsApp at 076805793. We will see you again tomorrow with the latest updates in the business globe. Vinod Varnasuriya will join you next with other Derana Sports Central. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.